Hi, everyone. Rich Sassman here with Century 21. Scott Swinford here with Hancock Mortgage.
That's me.
It's another Mortgage Ship Monday. Under weather last week, but we're back. So we wanted to talk about something that's a little different than our normal topic, but it's still very well related to all of it. And yeah, we both forgot to shut off our phones.
Let's turn off my
How about
phone
that?
here,
Yeah.
so it doesn't start ringing.
So
It's all good.
we're going to talk about what affects your home value. And now that I see, I forgot to capitalize what in there. So, woohoo.
Which leads us into the wear red for the teachers.
Yep. But we'll talk about that at the end.
And our capitalizations for language and English.
Yep. That's why we need teachers to stay in teaching, because people like me. No, what affects your home value? Desirability, location, location, location. Those are the three things that matter. Location, location, location. That's the old standard joke on what affects my property value. Those three things. But it goes into more than that. But how do we actually figure out what your market value is of your home? Well, it goes by similar homes in your area that have sold. The most similar and recent ones are the ones that we consider, because I mean, if an identical house sold down the street from you that has all the same things, guess what? That's a pretty great comparable home for you. So that's how we get that. And other things is quality of life in your area. Places that tend to have a lot of things to do, like Crown Point, for instance, having the square and a lot of activities for families and whatnot, they tend to be more in the demand, and so the old supply and demand rule. The more of a demand for something, the higher the price is going to be. And luckily for us homeowners in Northwest Indiana, we have seen in general a very high gain in the past 4 or 5 years in home values, which is why we're starting to see people moving on up in the world, selling their house that they never thought their house would be worth that. Now it is. So they're selling it and moving into their dream home.
And speaking of location, with us being so close to Illinois,
I love Illinois.
and their property taxes,
Love you guys.
and the other things that they're doing over there, exactly, then that makes Indiana a little bit more desirable.
Mm-hmm.
And then, of course, I would think we would start to see things along the state line, so people have a quick commute to their jobs in Illinois, but can still live in Indiana. Are we seeing that?
Yep. Hey, let's play a game real fast. It's a one answer. Will Indiana taxes for your home that you live in be ever above 1% of your home value? Ring in when you're ready.
Oh, wait a minute. You used the word ever.
Oh, it's in the Indiana Constitution.
Wow.
Yeah. So Indiana property taxes are capped at 1% plus like school referendums and stuff like that. But still, they're capped. So if it's your homestead, if your home is worth $200,000, chances are it's not going to go above $2,000 unless there's a referendum. And many places are way under 1%.
Right.
So especially when you get into Porter County and whatnot. But I mean, and taxes have a lot to do with value. If somebody's coming over here from Illinois and they're going to save 70% in taxes by coming here, guess what? They can afford a lot more of a house. Therefore, our home values start jumping too. And the last thing that I want to talk about that affects home values, it's pretty simple. It goes with quality of life, but schools. The higher your school is ranked in general, the more desirable your area is going to be. Therefore, the value of your homes go up. So, as most of you know, my wife's a teacher. I'm a huge proponent of helping our schools out. They're running 3 clubs every week, and I cannot say this enough that what's going on Tuesday, Red Fred, is not about teacher pay. It's about teachers' resources and being able to get students help that they need. The fact that there's 24 kindergartners in the classroom and one of the top-rated school districts because they can't afford to have another teacher, or they can't afford to have even helpers in the classroom. Right? It's 24 students without a paraprofessional in the room. So even having a paraprofessional, which they don't get paid a lot, but it makes a huge difference in the classroom having them there for a few hours. So it's all things like this that go into why 120 something school districts have called off tomorrow to allow their teachers to go down. So, and appreciate all the steel mills and Teamsters and whatnot. I believe they're providing buses for people to go down to Indy tomorrow and whatnot.
Right.
So,
Right.
but yeah, it's much more than teacher pay. I mean, even though they are 50 or 51st out of 51 states and District of Columbia, and pay raises, and is what Indiana is right now. So it's not too great. But having said that, please wear red tomorrow. Support your local schools. It helps your property value. So that's the most important thing, is that good schools, quality of life, and location all go into determining your home value. Now, if you've owned your home for more than 4 years, I would say right now, and you don't know what your home value is, just reach out to me. I'm more than happy to do a property valuation for you. And guess what? If you're paying PMI over those 4 years, chances are you're probably past that 20% where you could either refinance out of it or get rid of the PMI. So contact Scott here. How much is PMI in general?
It just depends.
It depends.
It's a portion of your loan amount, a percentage,
Mhm.
and it's based upon, because it's insurance, it's based upon risk.
Mhm.
So it'll be generally a percentage. We just quoted one out today. It was, I believe, 0.66% of the amount. So for this particular loan, it was about $96 a month. He was putting down 5%, but he's got exceptional credit scores.
Mhm.
And that's just on conventional. It's higher with FHA because you have an upfront and a monthly that you pay. So it's all gonna depend. But it's an insurance policy that you are paying for in case you default. So it goes to help pay the lender, repay the lender should something happen. So if you've got enough equity in there, or we can refinance you out of it. And by the way, there are a couple ways that even if you don't have 20% down, where you don't have to pay mortgage insurance. So
that's why you need to know a guy like Scott right here.
If you're curious about that, let's chat.
Mhm.
Reach out to me. But even like I said, even 4 years ago, if you've only put down a minimum down payment, you're definitely going to see some appreciation in the area they're in. But there's also some things you can do. You can not only drop the mortgage insurance, but potentially lower your interest rate, lower your monthly payments. There's some other things that you can do that would be beneficial.
Exactly.
Again, Rich and I were joking around about this before we started filming. We don't want you to use your home like an automated teller machine.
Why not?
Your home's not an ATM.
That's my money. I want it now.
It's
Andrew
not.
Wentworth.
Well,
It's not a structural settlement, but
it's one thing to use the equity in your property to pay off higher interest rate bills.
Yes.
If you're going to go out and pay off your car loan or your credit cards, that doesn't mean that you should take the money out of your home, pay those off, and then go max out your credit cards again. Or think, wow, I just paid off this car. I'm going to go buy an expensive car and get another $7 or $8 or $900 a month car payment because you lowered your mortgage payment. You thought, I've been paying this each month. Why not spend more on a depreciating an automobile or something that loses value when you drive it off the showroom floor, as opposed to a home, which we talk about every week. For the most part, they are increasing in value.
I'd say in Northwest Indiana, pretty much properties are raising 5-6% a year in value.
Some areas they've said 8%, almost 9%.
There's pockets of Crown Point that are 11, 12.
It's crazy what they're going up. But remember now, we want to be your guide here through the process. Just because you hear this, or you hear that property values are going up, or this is a good deal, doesn't necessarily mean that. Remember, everything you hear is not necessarily true.
Yep.
Well, I heard from the neighbors, dogs, friends, mom that no. if you have questions, please feel free to reach out to Rich Roy. That's what we're here for.
Yep.
We're not here soliciting your business. We're not here saying you have to use us. We're not saying you have to use us, but I promise
we would love it if you did, though.
We will show you the value behind using us.
Yeah, and
always.
And I can honestly say this because a client that we've both been working with, we're helping them out, and we've found out that if they just save up a little money, work on their credit, it's going to help them out in spades. So guess what? We do what's best for our clients, and instead of trying to say, you need to buy now, we're saying, let's improve some things. We have a few people in the pipeline that just need to get their credit score just a little bit better, so their interest rate is that much better, and they can afford their in their dream range. So that's what we do. We're not going to try to sell you a product because we're salesmen, but we want to make sure that you do the right thing. I have a fiduciary responsibility to my clients. It has to be in your best interest, or I can't do it.
Right.
Like that's line one.
And it makes sense. Right. And we also, one thing that we want to do is we want to weigh the cost and benefit analysis of doing that.
Mm-hmm.
So is it okay to wait 6 months if you think the rates are going to go down a little bit?
Mm-hmm.
Because what happens if you wait 6 months and rates go down 1/4 or 0.5%, but yet the cost of that same house goes up 4%?
Mm-hmm.
So if it's a $200,000 house, let's say in 6 months it's worth $208,000, it is possible that the payment on that $208,000 house could be higher, even with a little bit lower interest rate that you might get 6 months from now if they go down.
Exactly.
So we want to balance those things out. We want to, again, be the guide and tell you, this is what your best move might be. Let's get you to here, or decide really what your goal is, especially on refinancing. Do you want to take cash out? Do you want to lower your payment? Do you want to pay your home off sooner? Do you want to do all three? Because that's a little tougher. 2 out of 3 is really not bad. Lower your payment and pay it off earlier, what have you. So that's why we're here. That's why we do these videos every week. It's not because both of us enjoy sitting in front of the camera looking at ourselves.
Well, I do.
Okay, only one of us does that. But it's because we want to get the information out there and try to answer some of the questions that you might have already. And if we're not answering them, you can think of any, let us know. Type them in the comments, reach out to Rich.
Yeah, feel free to ask any questions you want. If you enjoy these videos or you think you know somebody that can benefit from watching these, please tag them in here. Feel free to like and share this. It would mean the world to us too if you did that. That way more people will see what we do. We just want to be a voice and help you guys out in what could be a very confusing process, which it doesn't need to be. It's a pretty straightforward process. And other than that, I got a great week coming up. Got a potential listing, so stay tuned for that. If you guys are interested in the value of your home, feel free to reach out to us anytime. If you're interested in seeing how low the interest rates are right now, we were having a conversation in what was it, August? We're going, man, they're pretty low. I don't know if they're going to get any lower. And guess what they've done? They've gone lower. Yeah. So
remember, interest rates too. There's an art to shopping for them. Mm-hmm. I just had someone reach out to me the other day and said, so and so quoted us 3.5% or whatever it was, and our closing costs would only be $12,000. Without seeing the loan estimate, it's hard to tell if that's a good deal, but it's a VA loan. So it sounds to me like the rate or the quote, the costs might be a little bit high on that, but they could be using the extra funds to buy the interest rate down. So it all depends. So just be cautious when you're saying, well, so-and-so is offering this rate. Well, what will it cost you to get that rate? And is it buried in there somewhere?
CTC, cost to close.
And that's what we want to look at. So we want to look at both of those. So again, just, like Rich said, it doesn't have to be difficult, but you have to understand, it's not a game, but you have to understand how to play this, what to look at, because the interest rate is probably about the third or fourth question which you should ask me when you're saying I want to refinance my home, because rate can be it can be confusing, and the loan officers can be confusing when they quote you a rate.
Yes.
So just understand you're looking for a balance of rate as well as cost.
Exactly. Yeah, and we and once again, we have to do what's in your best interest. If somebody comes to me and saying, "Hey, this guy's willing to do it for this," and I know I can't touch that price, I'm gonna be honest. Be like, "Hey, you know what? I hope you enjoy the service that he provides, but I know with my service how much it costs. That this is my value, and I wish you luck. I'm not going to try to steer you towards me when I know I can't beat that price, but I can beat them in service any day of the week. I'm confident in that. So that's my thing. Other than that, I hope everybody wears red tomorrow. It's Red for Ed Day. Support our public education. 90% of students in Indiana go to public schools. I'm a product of public schools. Scott is, and we wouldn't be where we are today without them. So, all the teachers out there, thank you. Keep doing what you're doing. And do you have anything else? No? Yes?
Yeah, I was going to say, have a nice day. And when you say that, people are like, "Oh, that's really cool," because it sounds much better than "hope you enjoy your next 24 hours."
Yeah.
So, you know what? It's just the way you say things. It's the way you phrase it.
I hope you enjoy the next 6 days before you see us again.
Exactly.
Does that
sound weird?
It does sound weird.
But anyway, so we're gonna sign off here. But hopefully, this has been helpful. We're just having a little bit of fun today.
Yep.
Kind of enjoying ourselves, and that's usually what happens when you put Rich and I together in the same room. If we're not talking about how to better help our clients or how to better do this or that, we're just kind of goofing off.
Actually, that kind of ends up being fun, especially when a mutual client starts texting us and going, "You guys are acting just like how you do when you're showing me houses." I'm going, "Yeah, it's supposed to be fun. This is supposed to be a fun process. It's not supposed to be a stressful headache process." So that's what people need to realize. Education and communication. That's what I strive to provide. I know Scott also does that, so got to have fun.
Absolutely. We're here to be your advocate.
Yep. All right. Other than that, I will see everybody next Monday, if not sooner. Have a great week.
See y'all. Take care.
Scott Swinford, Hancock Mortgage. Rich Sassman, Century 21. I guess I should point to me, not the wall, right? All right. Bye.